What is going on, investing bros? It is me, T-Shroom. We're going to get into it. Start off on the Bitcoin chart here, as Bitcoin is making quite a move higher this morning, now rocking out at $41,000 per coin. Let's jump down to the 4-hour chart here and get a little bit of a more granular look at the king of crypto. You can see it had a gigantic 4-hour candlestick here that put the price 3.2% higher. Now, it was finding a lot of support here on the midline of the Bollinger Band, and then went ahead and sliced through up that upper band there on the 4-hour. Nice to see it. Now we're kind of testing back lower, seeing if we can get back below that top line of the Bollinger Band there. So the Bollinger Band actually being a pretty surprising, I wouldn't call it support because it's technically not supposed to be support, but that does seem to be where the battleground is, at least down here on the 4-hour chart. Let's go down to the 1-hour and see what we can't pick out here. Yeah, so it's already sliced back through the top line of the Bollinger Band on the 1-hour. But this is exciting stuff, guys, right? Because going back out to the 1 day, because we've been asking the question, what is going to happen here? Are we going to push lower for Bitcoin after we broke through 41,200? That's kind of been the question. Are we going to break lower and go down and test 30,000, 32,000, where there's monster support, where likely we won't go too much lower? And if we do, probably 25 would be the next stop. Well, it looks like for now, at least, according to the charts, traders are bidding this higher. Now, we're going to look at some stories. We're going to look at some information about why this might be happening now and what we can expect moving forward. Maybe make a couple of predictions here before the end of the stream. It's going to be pretty interesting. One thing that is starting to steam up right bullish is you do have descending red histograms here for Bitcoin on the daily chart. You also have the MACD line starting to curl. So that curl into what? Take a guess. A bullish cross. So you had a bearish cross here. Both of those kind of began a pretty prolonged, bit of selling here. But whenever you get a bullish cross, right, which is what we're kind of gearing up towards over here, get a bullish cross, you get some prolonged buying momentum. So that's what we're looking for here. We're looking for that bull cross to go in. Hasn't happened yet. It still has a little ways, right? This could easily reverse and keep going lower. But right now, indications are initially showing, hey, there's some buying here. There's some real buying pressure here, and we're going to try to make a move back up to 41.2, confirm that as support, and then push higher. But right now, that's the battle. Today does seem to be the battle to get a candle close back up above 41.2. Right now, we're not there. We're at 41, right? So buyers need to come back out, and I just don't know that there's a giant buying thesis quite yet for that wasn't already there the last 3 days, right? And in fact, some of these stories we're going to go over are going to show quite the opposite. So we'll take a look at those in just a second. Stick around. But China is going to be the main focus. It has been one of the main 4 or 5 narratives that I've been keeping an eye on that are going to be steering the market. So far, I would say that the Asian and / Chinese markets have not been the predominant force guiding the prices of crypto. It has been mostly GBTC, right? And we're going to get some news on GBTC here in just a second. But before we do, go ahead and smash that like button for me, and also consider subscribing if you've gotten value from this channel at any point in the last week. We have put out a lot of content this week, and we really appreciate you jamming with us. Tim has put out a video this morning on why Bitcoin's doing what it's doing over on the charts. and I highly encourage you guys to go watch that because I will probably take another look at the charts, but there's actually a much more in-depth technical analysis that Tim puts out. It went out about 40 minutes ago, so I strongly encourage you. That's this video right here that I'm mousing over. Right, you're going to have a lot of fun with that one. Very insightful. Tim totally destroys the chart, so it's really good stuff. So let's go ahead and go to the chat before we get into the stories quite yet. Nancy Croy coming in with the first chat. Nancy Croy is just an absolute animal in the chat. I don't know how she does it. I think she's got to be using alarms, might even be using bots. I think Eric Wallen for a long time we were suspecting was using bots to be the first in the chat. Well, now it's Nancy Croy. All right. We've got Gia S in the chat saying happy Friday. It is Friday, guys. TGIF. And then we've got Dylan Martinez saying, hey, bros, I hope everyone bought the dip. That's right. I'll tell you guys, I bought the dip. I bought BitX, the ETF. You guys could check it out. You have to buy it on an American brokerage. It is a stock, right? It's an ETF. It's not a coin. So go check that out. I also bought a decent amount of AVAX, some Sol, even some Binance. So yeah, those are some coins that I've purchased. Let's see. Army Piper said China markets fleeing their stock market dump. There you go. So Army Piper chiming in. And Piper, quick update for you. This stream should have that recommendation at the end of the stream to go to Piper Academy. So be taking a look at that. Make sure and verify that works. And anybody watching, let me know in Discord or on Twitter. Let me know if that works. Even put in the comments. Also, got my mother here saying exciting. She's excited for the price action. Hello, Mom. That is Susan. Blackie Chan saying good morning. All right, guys, there's a lot more, but those are some of the early comments. The loyal followers kind of getting in here early. The loyal bros, I should say. Nobody's following anybody. We're all one community. Army Piper said, Susan, send it over Twitter. So there must be some chat here. All right. We're going to move on into the stories here, guys. The first one is kind of neutral. It's kind of just information, good thing to know about. This is that AI agents could be important buyers of crypto, says Palantir co-founder Joe Longsdale. So there's a little bit of data here. Let's see what he's saying. So Palantir is a pretty big contractor for the U.S. military and other maybe I don't know if they work for other militaries, but maybe Piper could help me out with that. But they do a lot of analytics. They do a lot of data. Let's see what the CEO has to say. There's one type of buyer that could be very important here. AI agents are going to start doing a lot of things in our economy, he says. For AI agents to coordinate with incentive systems, they're probably going to use crypto. Are we going to be in a massive deficit in 2025, 2026 and spending money willy-nilly? If so, what assets safe, he posed. If you have inflation coming up again, that's a story I'm hearing from a lot of my friends who know macro better than me. You could see crypto do very well. So these are some important words from someone who has a lot of influence in rooms where people have a lot of money. So it's definitely something to keep in mind. Is going to be the rise of the AI bots. We've seen a ton of high frequency trading bots in the stock market and in crypto. That's not going away. But adding the variable of artificial intelligence, which, if I'm not mistaken, is already pretty well ingrained in crypto trading, and the CEO of Palantir here, Joe Longsdale, only sees that to be continuing to increase. So that is very important. Piper, that might be something to cover on your show. I'd love to hear your perspective on that as someone who's spent a lot of time in the defense department. So that's really, really interesting. We've got another one here. This is kind of a negative story here, a little bit bearish. Bitcoin ETF flows show negative trend for the first time since the launch. This is going to be interesting. I'm going to go back to the charts after kind of digesting some of this data. Let's read it. According to data collected by Bloomberg Intelligence analyst James Seifert, the 10 spot Bitcoin ETFs, GBTC included, saw a net outflow of 158 million on Wednesday. That was yesterday. That was 2 days ago. As of this recording, day-to-day flows can, of course, be mercurial. If you don't know what that means, actually, let's look it up. Let's see what Apple defines that as. I think it's like kind of dynamic and shifting and hard to predict, subject to sudden or unpredictable changes of mood or mind. Mercurial. Fun. Okay, so day-to-day flows can be, of course, mercurial. Numbers compiled by CoinDesk from other issuers' websites shows total Bitcoin held by all of the spot ETFs, GBTC included, as of January 24th, of about 649,000 versus more than 660,000 a week earlier, a decline of roughly 11,000 tokens. So there's been an overall decline of these tokens in the ETFs. Among the other 9 funds, BlackRock's IBIT and Fidelity's FBTC are leading the way, with each now holding more than 40,000 Bitcoin as of January 24 versus 20,000 to 25,000 for each one a week ago. Both are closing in on $2 billion in assets under management. However, inflows for both funds have slowed over the past several days. BlackRock, for example, added just 1,663 tokens on January 24th, its weakest daily addition since opening for business, and down from 8,705 on January 17th. All right, so this is kind of showing the data, and despite the slowdown over the last week, the 10 spot ETFs open for business on January 11th remain sizable. Okay, so the overall assets and the overall inflows over the last week and a half have been sizable. Seyfarth's Bloomberg colleague Eric Buchanan calculated that the total dollar inflows of $824 million since launch, which translates into a net Bitcoin addition of about 17 to 20,000 tokens. And we can see it illustrated here. You guys can take a screenshot of this and look at it later, but James Seyfarth saying day 9. Okay, so this is much more up to date. This is from last night. These ETFs report kind of their holdings and the fluctuations of inflows and outflows. They post that. It seems like they're posting that around 6:30 Eastern Standard Time. So James says day 9 complete for Bitcoin ETFs. BlackRock only took in 66 million. Okay, so that's negative 158 million outflows for the entire group, which is the largest single net outflow so far. Okay, so yesterday, not a good day for Bitcoin as it relates to these ETFs. Okay, so the ETFs were a net seller, right, of Bitcoin. Now, it's not the ETFs themselves, it's people like you and me, right, going in and buying and selling the ETFs, and then the ETFs, matching that on their side with the actual spot commodity Bitcoin, right? So now, should you be worried? I mean, it's the first data point where we've seen this, right? So I'm not saying you should be worried. I definitely would not say be worried here. This is not changing my HODL thesis at all. But what I do think is that this could be an interesting interpretation from the markets, right, that have been seeing inflow all this week, and then price moved higher last night, right? And now we're getting kind of the first bits of data saying that those inflows are actually slowing, right? So that could potentially be bearish at a time when price is trying to fight for a pretty critical line of support, right? But I've been bullish. I've been saying that we could be seeing the bottom right here. And so far, I would be right? Now we've moved up into the right, right? But the data, and these aren't opinions, guys. This is the data is showing, well, not so fast. Buying into these ETFs has actually slowed, and while Grayscale's bleeding has also slowed, now it's kind of a quiet before the storm. Now it's kind of a who moves next. And that's going to be really, really interesting. Of course, the ETFs are definitely not the end-all, be-all. There's loads of other buyers in the market. There's the retail space, like you and me, right? But more than likely, we have already deployed a decent amount of our dry capital, months ago, right? And in the last couple months, we've deployed an increasing percentage of our dry powder into Bitcoin, into crypto, in anticipation of the ETF approval, right? Now, but people are starting to get paid their paychecks, right, on the 1st and the 15th. People are about to get paid here in the next couple of days, right? So there is going to be a little bit of liquidity in the retail space, but that is a small bit of the market. Really, what is going to be determinant here, I think, in the short term is going to be just those traditional crypto whales saying, hey, is this the point where Bitcoin does go ahead and print higher and close a candlestick above 41,002, this major line of support that it's really fighting for as we speak? Or does it get rejected off that, and then we go down and test these lower levels of 37 and 35? The reality is that I'm fine with either. I'm planning for either, right? But while the ETF inflows are slowing, that is bearish, right? Even though the GBTC bleeding outflows are also slowing. I don't know that those really cancel out each other. I think overall, the ETF narrative as a whole has been easy to interpret as a failure, as disappointing. I don't think that at all, because the ETF approval alone from the SEC is a gigantic win that overshadows the short-term price action, that followed. I think that is like that is like pennies on the dollar compared to how important the approval was. Because if we hadn't gotten that approval, if we gotten a denial from the SEC, we would be in a totally different world right now. We would be talking very, very differently about Bitcoin. Not that it would go away, right? Not that it would lose its overall thesis as the new digital gold. However, it would be much more complicated, more than likely, much more complicated for American pension funds and large-scale investors, and certainly fiduciaries, to help their clients and help big money, big deep wallets get exposed to Bitcoin. Okay? But it didn't go that way. It got accepted. We got the outcome that the bullish Bitcoin guys wanted. So ultimately, now we're kind of in this weird, how does the market react? When are those deep pockets going to show up as buyers? I know, and I think a lot of that question has been answered, right? It's just kind of been in the answer to that question is they bought the ETFs a lot, right? Very, very aggressively. I mean, BlackRock's ETF is now 2 billion assets under management, right? So they now have, through their ETF, $2 billion worth of Bitcoin. That's nothing to shake a stick at, right? It's still the very, very beginning, still the kind of the seeds of the tree that's going to grow there for BlackRock and for all of the rest of the nine. However, there's going to be a lot different. There's more buyers and more sellers. There's a lot more market participants to the market than just those that are buying and or selling the ETFs. And that is where it brings us to China. So China has been a pretty dormant participant, but we're starting to get data that maybe they haven't been as dormant as Western market participants may think. Let's get into it. China's crypto trading surges to 86.4 billion despite the Bitcoin ban. Now, this is not inflows, right? This is just trading. So let's take a look here at the data, see what is being shown here by fxempire.com. And a lot of this is being taken from this article here, Reuters, which has the title, Bruised by Stock Market, Chinese Rush into Banned Bitcoin. Okay, so that's the original kind of journalist side. This is kind of tailored for crypto audience. That's why I'm reading it here. Crypto trading on and mining activities have been banned in China since 2021, but as the country experiences a downturn in its stock market in 2023, Chinese residents have been rotating funds into digital assets. Right, exactly what we want to hear, and it's something that we've known, and it's something that we've been tracking here in the Investing Bros, right? That narrative of the Asian thaw away from the freezed ban that China seemed to have put on both mining and buying crypto. The Evergrande real estate crash saw investors lose over $81 billion in investment and down payment on housing units. Very, very bad. Very bad. Meanwhile, China's CSI 300, think probably the NASDAQ and the S&P stock market index also fell 11.8% in 2023. Think about that, guys. Let's take a look at that. So while I've got the S&P right here, while the S&P is literally pushing new highs, and not just the S&P, also the Dow Jones, both pushing new all-time highs. Okay, China in 2023 saw the CSI 300 stock market index fall 11.8%. If you're a Chinese investor and you just got burned by real estate, right? You just got burned by real estate. And I wouldn't say you got burned by the stock market, right? But a shed of 11%, that's discouraging. That's very discouraging. Right? I don't want to continue to invest in these traditional Chinese wealth sustaining instruments that I have for so many generations. I'm looking to new ways to preserve wealth. Right? This also comes at a time where you have to assume that education and information dissemination is at an all-time unprecedented high for the Chinese people, right? Definitely not all the people, not saying that, right? But for those who are seeking alternatives, right, who are considering moving to the West, who have friends and family maybe who've been educated in the West, right? Or maybe they've just watched a YouTube video through a VPN. You have to assume that, kind of longings for an alternative style of living from what the CCP offers is probably on the top of the minds of a growing percentage of the Chinese population. Right, so let's read on here, because ultimately, if you can't buy real estate, you can't buy the stock market, right, your options are limited. Of course, you can buy gold, right? You could invest in, companies that are opening new, businesses. There's always going to be annuities, right? But, I think for a growing number of Chinese, crypto, digital assets are becoming a real option, right? According to Reuters, Chinese citizens are using bank cards issued by small-scale commercial banks to buy crypto through gray market dealers, believing that crypto is safer than investing in crumbling stock and wobbling property markets, according to Reuters here. Currently, Chinese investors use OTC arrangements, over-the-counter arrangements, online crypto exchanges, and overseas bank accounts to buy crypto, right? So they're not really able to use easy on-ramps like Robinhood offers, like Coinbase offers, and Uphold, and the many different options that we have in the United States. Also, large crypto exchanges like OKX and Binance also offer trading services for Chinese investors by providing guides for converting yuan into Alipay and WeChat Pay into stablecoins. Okay, so the exchange is doing the hard work to try and break off a piece of the Chinese market there, but they're fighting pretty hard. They're fighting pretty hard over there. You have to imagine that's a very expensive battle to fight for those exchanges. But due to its warmer embrace of digital assets, thawing. Due to its warmer embrace of digital assets and proximity to mainland China, many crypto exchanges and investment firms have obtained Hong Kong licenses. The likes of HashKey Group and OSL, those are not names I'm very familiar with, but according to Reuters, these are important names that both hold retail crypto licenses from Hong Kong Securities and Futures Commission, the SFC, kind of the equivalent to the SEC here in the United States of America, right? So why would these banks be trying to get these licenses? Because they're seeing a growing demand from Chinese mainlanders, right? Not just Hong Kongers, mainlanders who are like, I don't want to keep buying real estate. I'm getting burned by that. I also don't really want to buy this losing stock market index, right? The Chinese stock market not attracting as much investment as it has in the past. But let's read on. China's crypto trading volume also surges to 86.4 billion despite the ban, right? So they're using VPNs. They're obfuscating the Chinese CCP attempt to curtail trading and investing in crypto. Reportedly, Chinese citizens are using their $50,000 annual Forex purchase quotas to channel funds into Hong Kong's cryptocurrency accounts. Okay, so the Chinese looks like they have a little bit of wiggle room, $50,000, not very much, but it's some wiggle room, and they're using that for digital currency purchasing. According to a recent report published by Chainalysis, China's recorded 86.4 billion in crypto volume between July 2022 and June 23, which was even significantly higher than Hong Kong's 64 billion. So there's even more trading volume than in Hong Kong. Of course, from a population standpoint, there's no comparison. Hong Kong's population is pennies on the dollar compared to the Chinese mainland, right? So it's not a surprise. The surprise is that this number isn't zero because it's banned, right? How much of that is actually the semi-legal obfuscation, or you could say kind of abuse of this quota, right? That the CCP affords its citizens, and how much of it is just complete, and utter hacking, essentially their internet infrastructure over there, which has been designed from the start to be centralized so that the CCP can control, monitor what the population's doing there in China. I don't know, but the fact that that number isn't zero is very, very bullish. These recent developments and rise in trading volumes have led to speculation that Chinese government may be thawing to cryptocurrency and that Hong Kong may be testing ground for these efforts. The U.S. SEC recent approval of the Bitcoin spot ETF is also likely to lead countries like China to soften their stance from the crypto ban to develop a regulatory framework. I actually disagree with that last part. I don't think the CCP gives a flying crap about what the SEC does in the United States. I think the CCP has very, very different motivations for why they do what they do than what the American and the Western financial traditional institutions are thinking and doing. However, overall, I do think that the Chinese are going to have to kind of face the music here. And I think they're going to have to allow folks there in China, mainlanders, to invest in crypto. Because from the very little that I understand, I'm not going to be over here and claim to be a geopolitical expert when it comes to China. But the one thing that China is the CCP, I should say, is extremely sensitive to is unrest and potential for unrest, right? And if I have a real estate market that sucks, and I have a stock market that sucks in China, right? I know that people are going to want to start buying gold. They're going to want to start buying alternatives, and digital currencies are going to be on the forefront of their minds. Keep in mind, China has a CBDC that's been activated since, I think, 2018, right? So while here in the United States, the average person may not really even consider themselves as someone who's ever going to use digital currencies, in China, it's a different story, right? These folks, it's not all of them, right? But a lot of folks in China have been able to use digital currencies. They're much more familiar with it. There's a lot more QR code scanning to pay for things, whereas in the United States, Visa and MasterCard really have cornered the market and, importantly, the mind of the consumer to use credit cards. There in China, it's not like I know, right? But I do know that they have a lot more integration in digital currencies, right? And so if I'm a Chinese person and I'm seeing kind of the fall of these traditional markets of real estate and stocks, I'm thinking, well, there's other digital currencies I've been hearing of, things like Chainlink, things like Ethereum and Bitcoin. Why am I using, the Chinese digital currency when I could be investing in those currencies that a lot of my friends from the West, my friends from India, my friends from Japan, they seem to be buying up those digital currencies, and they seem to be very happy with doing that, right? It's not too far away for me to say, hey, maybe that $50,000 Forex quota that I have, I can go ahead and put into crypto, right? Or I can just fire up my VPN and go ahead and use that to buy crypto. That's a lot more risky, right? And probably highly illegal. I don't know what the penalty is, but I'm sure, judging by the history of the CCP, it's probably pretty steep. But one thing I'll note here is that if you're an American watching this, right, or if you're not in China, right, you might be thinking, what is this VPN technology that you speak of? Here it comes. Now, NordVPN is one of our partners, and they're actually sponsoring this episode. They're bringing you this episode. It wouldn't be possible without them. And right now, their NordVPN technology is actually 63% off. Now, what does this do? What does this do, though? Because why would I need a VPN? I don't live in China. Well, VPNs are for everybody. They have perks for anybody who exists on planet Earth, right? You can stay safer online with the leading VPN service that is NordVPN. Right? You can also detect malware during download. You can block trackers and intrusive ads. And the reason that they're using it over there in China is because you can basically be active on the internet and nobody knows what you're doing because you can be using the VPN of some server in Singapore, right? Or Moscow. And nobody would know that it's actually you who's buying crypto and putting it into a wallet, right? That's what NordVPN can do. A lot of people in crypto use VPNs so that they can leverage trade on, exchanges that are actually not legal, kosher, right, in the United States. Now, I'm not saying you necessarily do that, right? But, it's pretty popular. However, we're partnered with Blowfin. Blowfin is an exchange where you can leverage trade without any KYC. We've got a link for both VPN, NordVPN, and Blowfin in the description of this very video. Thank you so much for watching. We're here at the end of the video. I really appreciate you tuning in. Let's get one last check here on the Bitcoin charts, and then if you stay tuned, meaning if you don't close the tab that you're watching, if you don't close the YouTube app that you're watching this video on, it should pipe you straight on through to Army Piper's Piper Academy, where you can watch Piper, TradeFly, and OC dive much deeper into the charts than I did. and also digest this AI story, which I'm really interested to hear what Piper's take is on that. But before we go, let's go down to the 1 hour chart here for Bitcoin. And we can see it has not been able, it's got a green candle. It's trying to fight to get back above that top line of the Bollinger Band. On the 4 hour, candle is still, if it'll load here, candlestick is still red, but it is printing above that top line of the Bollinger Band. So as of now, I'd say, not clean bill of health, right? But overall looking pretty bullish. We shall see you on the 3 p.m. show, where Tim and I are going to go much more in depth. We'll have more candlesticks on the 4 hour, much more on the hourly, and we'll be able to see kind of how the rest of the weekend could shake out for crypto and how we can get set up for another week of trading next week. Guys, it's Friday. Crack a cold one if you participate. Have some fun. Stay hydrated. Keep your stop losses tight, and I will see you at 3 p.m. See you there.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shouted out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros.